Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it together. If you need help with anything, check out finding-value.com. I dive deeper into all these topics and subjects looking for potential investment opportunities, sharing those opportunities with everyone in the community and talking about them. This week, or weekend, I should say, we got two ideas. One is to go over some conference calls that I've been going over and summing those up. Another thing that we can do, since there's a lot of buying opportunities across the board, we can start looking at opportunities and how I would allocate to those opportunities as I have been buying, and you guys can see that on the website. So if you want to be interested in that, Sunday, 5 p.m. Mountain Time, that's when we have that Zoom call. It is recorded, and I do put it onto the website after it is done. And you can see what my favorite companies are and how I would allocate, maybe even set up a portfolio to that if you want me to do that. We do have a coupon code special that is active right now, 50% off the first month and a larger discount on the yearly membership. All right, let's dive in, take a look, see what's going on. Starting with the DXY. DXY is getting smoked. It is getting smoked here. Big time move lower. The past 3 trading sessions, big movements in the DXY, down 1.14%. And commodities are priced in dollars. And when the dollar drops, what you can see is that generally you'll see a move higher in commodities as a general rule of thumb. As the dollar weakens here, money will also rotate and move differently in the markets. If it moves big enough and fast enough, sometimes emerging markets do very well as other currencies strengthen against the dollar. And that will facilitate money moving from dollar-denominated assets towards other currencies if they are strengthening against the dollar. So we could see money rotation. Each one of these DXY long-term moves, these downward moves, these were all, every single one, commodity bull markets in every single case here. Those big arrows there. And we could get another arrow, which is what I think could happen, where that goes like that coming up, which would be a commodity bull market. So first one, another one, and another one. The 2-year yield is up a little bit, but we still have downside momentum. This is sold off quite vigorously is what I'll call it. It's dropped quite a bit from 4.35 down to 3.94%. And we want to see what the bounce is here. If it's a small bounce, we could easily roll over and head lower, where the 2-year continues lower. And that is a possibility. We got the 10-year yield up 1% today. Not, it's a pretty strong bounce. We do have a reversal candlestick that we got yesterday, that big bullish engulfing here, which signals a bounce. Now we're looking to see how strong is this bounce. Can we get back above and through this resistance area, which is just a trend line sitting on top of it? And we'll have to see what kind of follow through we get here, or lack thereof. The 30-year yield also bouncing 0.75%. This is off support, nice big bullish engulfing yesterday, signaling that we've got upside momentum. It carried through today, and we'll see how sustaining that move is. I know some people, oh, there's a gap here. Well, drawing these things, it's not about being perfect. What you want to identify is this is the consolidation here at 3 hump, and then you can just put a line wherever. You can draw it like this. It's not as important as what most people think. A lot of people with these nice, clean, pretty looking charts, but want to look deeper than just the chart, because a pattern is an extension of the psychology of humans. And then at certain areas, you're going to get support resistance. The more shares are traded in certain areas, you're going to get support and resistance as you look to the left, irrespective of where this line is drawn. As artificial intelligence has improved, they're starting to throw where these things go. They're starting to manipulate the price movements in both directions to get people on the wrong side of the trade. So I think you have to be more knowledgeable than just looking at lines on a chart. You also want to know some of the background, in my opinion. Is it expensive or cheap? Is it in an uptrend or a downtrend? Simple stuff like that. And then the fundamentals behind the sectors, inventory levels, whatever it is. But moving on up here, and that looks good for the 30-year. The TYX TNX ratio pulling on back a little bit. Not going to be gigantic support for gold. Doesn't mean gold can't go higher. It just means that it doesn't have the big tailwinds if this were going up. Especially, going up like this, gold's got huge tailwinds. And then when it reverses, that's where gold peaked, and then it reversed it. We've got bond prices down because yields were up today. So we have a little bit of a pullback there, and I still don't know which way this is going to go. If someone were to ask me which way are yields going to go, I would say bond prices down, yields up. I'm still in that camp, but I know that there are people who want yields lower, and I don't know if they can get what they want, but they could try. We'll see. The 2 and 10, a little bit of yield curve uninversion, so it's uninverting. That when this drops, especially if it drops like a rock, like this here, any of that, that is scared. People are scared, and whenever you start to see these things drop like rocks, um, like a free fall, very elongated move, that's generally a problem. People are scared and they're running to bonds. And then the yield curve uninverts rapidly. Now, could we get an uninversion rapidly? Most recessions come from the housing market, and the housing market doesn't look that bad. Now, some people are going to disagree. They're going to disagree and say, well, home sales are down. Guys, there's no inventory. That's like going into the store and saying, well, not a lot of people are buying stuff. It's like, yeah, because all the shelves are empty. And number two, even if it was expensive and the store was empty, it's still empty. Even if sales, or I should say, there's stuff on the shelf, there's not a ton, but sales are low. So people are not necessarily buying a lot of it, but it's sales is a function of volume. And some people say, well, volume precedes the movement. And I would say, well, it's a lack of volume. And that's kind of affordability is having an impact. I don't want to go too deep into it, but anyway, we don't have a forced selling market yet, at least. And I don't think it's going to come from the real estate market. It's probably going to have to come from something else. The gold's up $11. This is not a power stance here. And again, what makes this kind of funky is I know they're in there trying to slow down the price of gold. So reading the charts becomes more difficult. We've got selling pressure, and then we've got a weak bounce, which would indicate a move lower. But if these is people in there hitting this thing lower, then this is a false signal, which means we could still easily go up because these signals here are all false. It's someone in the market trying to slow the move down so it doesn't run up to $5,000, $6,000, $7,000, whatever. They want a slow, controlled move. So usually in the middle of these things, you don't get these gigantic, large candlesticks that are just sitting out of nowhere. Those are usually distribution candlesticks that you see at tops. But almost all of them, if you look, like we can look back here, they gap them in the morning, like at night or in the morning is a lot of these movements. So why would someone come out and sell like heck in the morning unless you want to move the price? Anyway, but that looks a little bit bearish. Doesn't mean that we'll get follow through though. Silver's looking fantastic, up 2.8%. Nice big green middle finger candlestick. Love it. And I think this has room to go way higher in the future here. In the near future, we could see a big move. So silver looks fantastic. Platinum's up $6 an ounce. We're still in this pattern here that we haven't broken out. And I don't expect platinum to break out necessarily against gold or silver until the market condition switches from a safe haven fear kind of trade into an inflationary trade. So I think it will outperform when inflation comes on, and that's when we'll see a potential outperformance. And then palladium just chopping sideways today. Not much action. Still looks bullish to go higher from the candlestick action there. The little flag pattern. GDX up quite a bit, 3.5%. GDXJ up 4.5%, and SILJ up almost 6%, 5.84. Big moves and kind of a downtrend line there, breaking today. So lots of money rotating into the mining companies. Does this mean that we could see a bigger move in miners? Yes. This looks fantastic. I mean, this is your resistance here, and we're above that, and we could move quite a bit depending on what the metal prices do. So it's positioned very well. GDX is also moving higher. It's breaking on up. It looks good. XAU to gold ratio, we are up 4%, where the gold silver mining companies outperform gold quite a bit today. And that looks hopefully like we can get a bottom here and start moving on up. We are coming from incredibly low levels. This is and could be a historic opportunity for those in the gold and silver mining companies. And maybe we can get a big move. Now, I look at all these different sectors, they're all different ideas, guys. So when I say it could be a historic opportunity, it doesn't mean that I put all my money into gold and silver mining companies. I'm not all or nothing. It's an idea across maybe 8 ideas. And you don't have to go all in to make a lot of money. You want to allocate, in my opinion, a certain percentage to capture the move. But it doesn't mean that if it doesn't work out, that you're going to be frustrated and go broke. It's about managing your it's looking across, looking at your risk rewards, and then managing or coming up with strategies to manage all of it, to capture the move in some of it. And I think that's where people have big downfalls, is they get real overweighted in one sector, whether it's uranium. I see a lot of people like all in on uranium and all in on maybe gold and silver junior companies or something. That's when you generally get problems. Anyway, crude oil down 2.8% or so today. A pretty big move. We got a big wick at the bottom. We're at support. We'll see if support holds or if there's further downside pressure. If we're going to go to the 50s that some people are talking about, and some people are even talking like 30-something dollars on Twitter, if that was the case, we're going to see dive bombing in the equities. If other people believe that. I'm not in that camp. I don't think we're going to the 30s. 50, I mean, maybe on a short little blip down, but I'm not really in the 50s camp either. I think that there's a strong probability that we could bottom here at any time. Who knows? But 66.34 is where we're at today. It is a down day. And I think that we're in a pullback of a larger move. Wave 1, this is kind of that pullback. And then we'll see when we re-engage Top Gun style. TTF gas down 5%. Looks like we're getting a little bit of selling pressure here in the short term for the downside in TTF. Natural gas in America moving upward 2.4%. I'm sure these are converging at some point. So natural gas as LNG capacity comes on, and we'll probably see these converge in the future. So XOP, yeah, you know me, down 1.57%. A decent move with a big wick at the bottom, but oil's down 2.8% or so. So this outperformed oil itself, the equities. If we see and an underperformance, what you'll see is a gigantic breakdown. This one here, this is an ugly looking one, but this is a shoulder head shoulder. We had overproduction and all sorts of stuff, and that was that big move to the downside, and it broke. We had upward facing patterns and all sorts of stuff. Then we went into that big bear market from 2014 all the way to the bottom of 2020. In my opinion, from 2020, that was your ultimate bottom here. And then it's coming on up. And this here is a consolidation that will eventually break higher. What would be the catalyst? Well, there's two major catalysts. Obviously, supply demand characteristics, shale rolling over, and all of the supply demand. But another major driver is the value of the dollar. And this is being valued in dollars, the crude oil. So I think, at least in my opinion, that we will bottom out somewhere in that circle there, either where we're at, or maybe it goes down a little bit lower. Tough to say. Where we get some sort of pullback or whatever it looks like, just like this fractal I've got pulled up. Something similar to that, and then we'll go higher again. And it'll be driven by the dollar, and we'll break out of this shoulder, head, shoulder pattern to the upside. OIH down a little bit too, down 0.09%. We put a big wick at the bottom here on the daily candlestick here, which is generally good because you're getting buying pressure. If we were going to go to $50 a barrel, it's still possible. I'm not saying it can't. You would see much larger down candlestick following this. If we see an up candlestick with like a big bullish engulfing, we're going higher. If we see a big red show up next, we could very well head lower. And that's what we're looking for. We did break out of this support bottom with a large red candlestick, which means the momentum is still to the downside. Newcastle coal futures up 1.5%. That is a big bullish engulfing. Looks good to go higher for coal futures. We've got Sprott Physical Uranium Trust up 3.09% at the bottom of this flag pattern. It's looking better, and I do expect this to try to work its way on up from here, breaking this downtrend and doing basically a return move. We've got uranium futures pricing down 1%. So it's still drifting a little bit to the downside. We need, a lot of people say we need a catalyst. Well, I don't know if you need a catalyst. I mean, you just need buyers to come in. We need people to get the sentiment needs to turn around for uranium. URA, we're seeing positioning in the equities, 2.58% up. The momentum is still down here though. But usually, I'm just going to talk in generalities, guys. Usually when you see a bottom here, you're going to get a second bottom. And then if you see these wicks at the bottom, if you're an aggressive investor and you believe in the thesis and you believe in the value of uranium and all that, then, this is not technical analysis. Well, it is and it isn't. But this is where I would fire off potential purchases for an early purchase, for more aggressive. Uranium also putting in that wick at the bottom on the weekly candlestick. We are coming on up, and we still have some downside momentum. We're not clear yet, but I do think it's trying to find a bottom, and we'll see what kind of follow through there is. Tomorrow, if we get a big bearish engulfing candlestick, then yeah, it's still bearish. URNJ also up 1.2. We've got this bearish engulfing here. So the momentum is still to the downside. We're getting a little bit of a weak bounce, and we need to see what follow through we get over here. A lot of the times, if you were to look, you can look to the left. You're going to get support in this general area here. That cut through that like a ninja sword through butter. But we've got a lot of support in this general area. So I do expect this to probably try to find a bottom in the general location of where it's at. Copper, ripping higher, guys. Look at this. Break out. I know there's a lot of stimulus going on over in China. Yeah, I like how Trump says it. China. Yeah. And it's breaking higher. Now, here's a weird thing, right? We saw crude oil was lower, right? Well, let's throw crude oil on top of copper just for the heck of it. It's the same damn chart. The movements are the same. Um, Oil is more leveraged than copper. That's why the highs and the lows, um, basically the range is larger than copper. So copper's going up while oil has been going down. Why is there a disconnect? They generally move together. Which one's right and which one's wrong? Is copper wrong, which is Dr. Copper, or is oil trying to be held low? And is it going to do a catch-up move to the upside? That's my take. With the dollar dropping, I think these are all going to move on up. COPX up 7.6%. Big day today. Looking pretty good. I believe it's going to follow wherever copper does. Iron ore pulling on back. This is your return retest move. I would be a buyer. And I think this will work its way on up. We've got the dead period here, and that's a good entry point. Aluminum up 1.72%. We are trying to break through, and we just haven't gone yet. We've got the lows just stepping up right into this bad boy. It's going to explode here at one point, and you're going to see it break out. And what it's going to do is you're going to get a big breakout candlestick, just like copper did today. Same thing. And it's going to break and move on up. Nickel up a little bit. It's trying to work its way on up. It's bumping and grinding here. We've got Moo up about 2% today. It looks like some buyers are coming back in this market. And I think that this is just a retest move. So it's a breakout. This is just a big retest, and that eventually will work our way on up. We've got emerging markets up quite a bit. Weaker dollar, higher emerging markets up 3%. I do think that this is going to work its way up dramatically. Like we need to make this a small thing, and I think this is going to do. I think it's going to do something like that. It's going to go way up, similar to what happened back here. You don't have all of it back there, but very big move if we get a much weaker dollar. We've got the structure, this structure here. We broke out, but they raised the dollar massively there and kept everything in check. But if that dollar drops, emerging markets is going to light. It's going to be lit on fire there. KRE, we've got a retest there, and we're right on support of this guy going across there. We've got TAN. This guy just cannot catch a break, but it's solar. But yeah, this still looks bearish. We've got lithium up 1.29. I think this looks good. We've broken the long-term downtrend. We've got a nice big, I call it a surge higher with a lot of force, and then you get small selling pressure and a consolidation. You've got bullish engulfing with small selling. This is going to go higher. You're probably going to see a big move in lithium soon. REMX, I also like this one too. We've broken the downtrend. We've did a retest, and we've just been sitting here. I think this is going to work its way on up. We've got Baltic Dry Index down slightly, but the momentum's to the upside, looking good. XHB up 2.5%. This thing's got a rising wedge. This guy here, it's broken to the downside, and we've been pulling back. And this is a tough one because the fundamentals of the housing market, in my opinion, looking at household formation, still look good. So I expect this to go up at some point if rates continue lower. But right now we are in a pullback. Maybe it pulls back to $85. We've got Russell 2000 up. The plunge protection team's in there, holding this together at support. SPX is up 1.12, holding it up. And then the NASDAQ up 1.5%. This looks pretty bad though. It does not look that good, guys. Whenever you kind of squeeze up into the corner and kind of go sideways and you get a bunch of selling pressure, ish. SMCI down a little bit, down 0.61%. Trying to find a bottom here. We'll see if we get it. NVIDIA up 1.1. Kind of an ugly looking candlestick there. Lots of selling pressure on that side of the chart there. Bitcoin up 3% underneath resistance support. We've got Ethereum up 2.5% and still have downside momentum. Not a super strong move there. MicroStrategy up massively, 12%. Something going on there. I don't know what it is, but and then the VIX it's right sitting on top of this, and hopefully the PPT plunge protection team keeps this thing under check. Otherwise, if we get a big breakout, we could see a further leg lower in the S&P 500, and that could have an impact on other sectors like commodities and stuff. Looking at other currencies here, just to show you kind of the weakening dollar, you're going to start to see these things break higher. Your structures are all there to go higher. So money's probably going to rotate into European equities. You're going to see Australian dollar potentially start to break out. It was up 1% today. Canadian dollar, it's firming up on its bottom here. If the dollar continues lower, and I don't know if we're going to get a move like this, but yeah, that's the last bull market. Commodity bull market. Brazilian real strengthening, looking really good. And then the African rand, and they're like, well, why is this? I drew it on logarithmic, but the African rand, if we break out here, that could also be another play. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special coupon code and a Sunday question and answer session coming up at 5 p.m. Mountain Time. And that's all I've got. So catch you next time. This is Finding Value.